Have you ever wondered what really happened with the Bybit hack or why there's still so many hacks and exploits in DeFi? Well, we talked to the CEO and co-founder of Blockaid. We have Ido in the building and he's going to talk all about cybersecurity, crypto Web3. We talk about agentic AI payments, the concerns with stablecoins. They just dropped a report with Dynamic and others. So they have a lot to talk about stablecoins and what's happening in the industry, including regulations and what companies and blockchain exchanges and crypto exchanges can do to better protect their honeypot of crypto. This is a fun episode with Ido. He gives us all the lay of the land on what really happens with these hacks. And we're so excited to have Blockaid on the podcast. More excited to have them in the ecosystem. We even talk about how they can prevent maybe losses from pig butchering. Extremely exciting episode. I know you'll enjoy this one. This is your host, Stephen Sargeant, Around the Coin podcast. We finally have a Web3 security, my love, crypto compliance, blockchain investigation type episode here. We have the CEO and co-founder of Blockaid, Ido. You guys just raised a ton of dough, and we're going to get into that. But I want to talk to you a little bit about your background. Why don't you give us the elevator pitch? You're in New York, you're in an elevator, and someone says, what's your background? What do you say to them?
I say I'm Ido. I'm one of the co-founders and CEO at Blockaid. My background's in traditional cybersecurity. I spent a little over 6 years in these kind of like Israeli cyber intelligence units. And then over the past 3 years or so, been working on Blockaid, building tech to help prevent various different threats in crypto, targeting some of the biggest companies in the space.
Now, we've had so many episodes with cybersecurity folks, many coming out of Israel, Unit 8200. Is that kind of the expected path when you go into like the intelligence of the Israeli government, that there's like a clear path for building your own cybersecurity firm?
I think, obviously there's like incredible talent that comes from like cybersecurity. And so it's just like a great like founder market fit. That's not to go and say that like all the companies there are like incredibly successful or anything like that, but you do have this like melting pot of incredible talent that has to go through incredibly hard challenges, and I think that's a good formula generally for founding companies.
Now, I've been in blockchain investigation since 2018. Cybersecurity has never been sexy in the industry or talked about. What made you decide to transition from maybe more traditional cybersecurity to go into Web3 cybersecurity, with at the time it didn't seem that popular with the actual people using the protocols, much less regulators or governments? What made you decide to be very early in the space when it came to cybersecurity?
So I think I cut my teeth kind of on finding vulnerabilities in cryptographic implementations. And so I've like loved cryptography, not necessarily, like more traditional cryptography for years and years since I can remember. And then, was introduced to the space from team members that worked with me in these kind of cyber intelligence units. And ultimately, through getting introduced with them, fell in love with the tech, fell in love with the space, saw a ton of parallels to kind of like early internet infrastructure. And I don't know if you know this, but when you serve in like these cyber intelligence units, you work on like these air gap networks. And so seeing kind of the inefficiencies of kind of working on an internet, right? And then coming to like, this air gap network, and then kind of drawing those parallels to, having this maybe inefficient like traditional banking system, and then drawing those parallels to what it could look like, I think was like really, really appealing to me. And then, just became a user. And then I think in like 21, like DeFi summer and all these different things, right? Like being a user in the space, seeing like the massive amounts of money that were deployed into some of these things, and watching that grow. And then also understanding like how severely, unsecure like some of these pieces of infrastructure are. I was just like, there's no way something real can exist here unless it's secure. And so, that was like the impetus for starting Blockaid. It just like has to be a reality if the space has to grow.
Now, by that time, 2022 especially, the market had definitely cooled off from DeFi summer, but there was already a lot of blockchain analytics intelligence companies. The chain analysis were already huge. You had even market surveillance and things like Solidus Labs. Not to mention cybersecurity's companies in Web3, Halborn, Hacken. What did you and your founding team feel that was missing? Was it more on like, hey, the DeFi space is not covered all that well? There's not a holistic view of things that can be done without being hired by the company? Because I feel like Blockade is being used, can be used even without these companies specifically hiring you, just by the nature of your ability to track some of these trends.
Yeah, so I think like when we looked at the space, I think one, there were like some of these incredible companies. You mentioned a few of them that were focused primarily on like tracking and tracing incidents after the hack happens, right? And so obviously they were successful, but we felt like they were like, if we drew parallels like again like traditional cybersecurity, they were more so incident response pieces of software that enabled you to understand what's going on after something happens. And then I think when we draw the parallels to some of the auditors that you mentioned in the space, again, these were like services companies, almost like, and you have this in traditional cybersecurity as well, that come in and kind of try to prevent these things from happening in the first place as well. But there wasn't any kind of software that looked at proactively preventing these kinds of hacks from happening that teams could deploy and work with them to kind of streamline and prevent these things from happening outright. And so I think that was like the impetus for it, right? And the question is like, where to build first, what to do, how to go about, tackling the market in different ways. But that's generally kind of what we sought out to do.
Now we're going into 2025. Why do you think, before we get into the intricacies of what Blockade does so well, why do you think institutions, users are still losing money? Has, us as a society not held these protocols accountable for proper cybersecurity beforehand, proper security measures, audits, pen testing? Like, why are we still losing money, especially with so many options, including Blockade?
So I think like one thing that like we need to understand is that it's incredibly hard to do cybersecurity right. Like even outside of crypto, again, it's like incredibly hard to go and do these things. It's just think about it logically, right? It's much easier to attack, right? You can put all of your time and attention on one specific point and push as hard as you possibly can, versus like defense, right? Which is like you have to be perfect all the time, everywhere, all at once, right? And so I think cybersecurity is like a massive point of friction for company, or like point of loss for companies outside of crypto generally, right? And we should remember that. And even when there's like massive amounts of regulation, and when there's a leak of some sort of data, you get fined and all sorts of these different things, right? That's still it still happens, right? And so now your question is like, why does this keep happening in crypto? It will always happen in crypto, right? Like there's no like it happens in every other industry everywhere in the world, right? It'll always continue to happen. I think what's unfortunate is that it happens like all too often and all too frequently. And I also think we need to remember that in crypto, like the targeting is by oftentimes like state-sponsored actors, right? That are super sophisticated and super talented, and can devote tons of resources and the best minds in their respective countries, to going and kind of performing these acts, right? And I also think like regardless of that, crypto is a more attractive place to go and try to perform different types of hacking operations or cyber operations for countries or for groups that are financially motivated, right? In a world where ultimately, okay, I'm going to hack into some Web2 application or some traditional organization, and I want to make money. What do I do, right? So I have data. I can steal data and kind of sell it. I can monetize, the theft of that data through ransomwares, and then have them pay me. But ultimately, like it is a long operation that requires, that is illiquid, kind of, right? By the time you're able to go and kind of finally hack into somewhere or something, like creating revenue from that is like difficult. In crypto, it's instant. It's like super lucrative. It's super liquid, and so I think that also drives this kind of like makes our industry even all that harder to defend against.
That's super interesting. Yeah, you raise a great point, right? Even if you do a ransomware, you have to hope that they pay. You still have to, kind of respect the fact that if they do pay, you're supposed to give them their access to their data back. There's a lot of, back and forth, right? Where law enforcement and others can get involved. To your point, you hack an exchange, you get the private keys, and then your only trouble at that point is to offboard or off ramp that crypto into cash. And sometimes you don't even need to do that. You can just keep it into crypto and use it as collateral for other things.
Yeah.
I'm curious. We had Roz on the Chainalysis podcast last year with Ian Andrews. And, during the time of the podcast, there was actually the huge Ledger SDK wallet infrastructure hack. Blockaid was one of the first to report this on Twitter. Can you explain how you're able to identify these types of attacks sometimes before even there's losses involved?
Yeah, no, it's a great question. So I think, today we sit in a lot of places across the stack, right? We sit directly in line, simulating and validating transactions inside of different wallets and signing infrastructure. We sit passively monitoring kind of different operations on blockchains, working with different protocols to prevent different types of exploits and hacks. We look at both what we call high value incidents, right? Cases where millions, hundreds of millions of dollars worth of assets are at risk, and what we call high volume incidents, things that are of lower dollar denomination but happen really, really frequently. And so, when you think about where Blockaid sits across the stack, we have a ton of signal to everything that's going on all the time, right? And so specifically, right, the Ledger Connected attack, all of a sudden we start seeing, like our systems start seeing, right, malicious transactions coming from otherwise legitimate domains, right? And then we start, fingerprinting how those transactions look like, understanding that they're all associated with the same kind of group, understand that this is all happening all at once. And then, we get these kind of alerts firing off and a lot of our kind of, machine learning models and kind of heuristics and automations that kind of tie into everything that we do, enable us to go and figure out like, okay, great, there's like this incident happening, right, and unfolding before our eyes. And I think, we had seen similar cases, right? There was one a couple weeks back, targeting kind of very popular NPM repositories, if you recall that. And so the cases like these forms of like supply chain attacks happen all the time. And we're able to see a lot of it just because we're deployed across, so many wallets and so many different kind of pieces of infrastructure across the space that enable us to really be the first and the best at kind of uncovering and detecting these kinds of early warning signals very, very, very quickly.
How fast is the response? Zero Shadow, blockchain analytics or intelligence company just came up with an initiative because the incident responses for some of law enforcement around the world is too delayed to handle some of these attacks that are happening, in your point, in real time. When you're making these alerts and sending them out to either customers or the industry at large, are you seeing the incident response times close down? Like we saw the Colonial Pipeline, they didn't realize they lost their funds for, I believe, $600 million for almost a week. Are you seeing these response times now? Are there teams working 24/7 and SEAL teams coordinating to help stop these attacks once, maybe the first transaction is done?
So I think different groups in the industry have been able to kind of, I think honestly make significant strides forward. I think ultimately, you will always be in this position where, I think you're racing between someone who knows something ahead of you, and so responding with a person in the loop is oftentimes is necessary, but we're always going to be racing against right that. And so I think ultimately with a lot of these things in place, we have to have like automation and have that ability to kind of proactively prevent these things from happening. And in some cases, we definitely are deployed and have these capabilities of doing so. In other cases, yes, we're like alerting different groups. We work closely with Zero Shadow, with SEAL, and others to kind of go and prevent these things and respond to them kind of as fast as humanly possible. But it still is
with a lot
humanly possible only.
With a lot of the protocols you work with, what happens, right? Let's say you identify something right now, there's an alert. Do you have the authority to trigger to stop the protocol, or the infamous kill switch that some of these protocols have to stop all transactions until they can figure things out? Like, can you walk me through an average scenario or Blockaid alerts? Like, talk to me about what the customers see, what their next action usually is. Give us a common scenario so that people are interested in bringing on Blockaid, understands how it works.
Yeah, so I think again, like Blockaid does a lot in the space right now, right? And so some of the different attacks you're talking about are associated with like smart contract infrastructure. And in those cases, yes, we have this capability to go and kind of, leverage either a role with special permissions that were granted or things like that to perform a limited operation that, can isolate this kind of incident in an automated way, right? Again, oftentimes we try to scope this down in a least privileges way to make sure that we're only able to kind of really, really do the thing that we're embedded to do. In other cases, oftentimes we're embedded pre-transaction, right? So we're simulating the transaction before it's actually happening, right? There's different incidents, like what happened with Kiln and Swissborg, a couple weeks back, where that is a transaction that someone facilitated, right? And so being in a position where you're able to simulate and validate that transaction ahead of time, you don't need any kind of special privileges. You just need to kind of be a point of friction in that operation to go and say, hey, stop, like review this for a second, right?
And one of the solutions I see that's particularly interesting, especially you're based in New York. I'm sure there's the unit there in Manhattan and Brooklyn around the digital asset teams. Pig butchering, romance scams are the all-time high. But you have a crypto fraud prevention tool, which in effect, makes it difficult for these transactions to even take place. So versus trying to recover these funds, billions of dollars being milked out of North American and Western countries. How are you able to stop the frauds from taking place and keeping these large sum of funds, sometimes people's life savings, from being parted with them?
Yeah, I think it's a great question, right? So I think there's like this. The way that we look at things, like generally, right? I talked to you about, we have this ability to detect what we call high value incidents and high volume incidents, right? I think we would consider kind of everything to do with pig butchering and fraud generally that kind of takes place from these exchanges in what we call this bucket of, high volume kind of incidents, right? Things that happen all the time, usually low dollar denomination. Sometimes we see crazy amounts of money that are leaving like individual users in these cases as well, which is like super unfortunate. And we do a lot to go and kind of build different heuristics and models to ultimately identify these types of transactions before they happen, right? And so again, right, we use different kinds of probabilistic models. We scan the entire internet. We scrape tens of millions of new websites every single day in order to kind of, find these different types of sources, scraping different social media platforms, and then running different types of on-chain heuristics and models to go and say, okay, we understand these patterns, even though they've previously been unattributed and unlabeled, in order to kind of, create these risk signals to potentially prevent our end users and our customers from ultimately, interacting with these different types of nasty things.
And what trends are you seeing, or what, like, can you put a dollar value to, like, hey, this is what we've seen, this is what we've been able to alert or notify or potentially stop from, these scams from taking place? Is there any kind of trends that you're seeing, like Bitcoin ATMs, I think is a big one in the industry that people are calling out?
The numbers are huge, right? And I think there's all these different things popping up, right? I think like the case with Bitcoin ATMs and social engineering is like really, really interesting because, ultimately, when money, the points of friction that you have are generally around, various different like financial institutions that ultimately a user goes in, withdraws cash, goes to a Bitcoin ATM, and then just like fires that away, right? We see that uptick definitely come about. It's oftentimes hard because the financial institution that's like, then a user reports their fraud to is like, dude, you took out cash, right? Like what do you want us to do? And oftentimes, like the victims are very adamant about wanting to do these things, right? And so then the point of question is like, okay, great. Are the Bitcoin ATMs like liable for facilitating these different kinds of things? Obviously, today they're not. And then I think, so I think there's definitely like, a lot of these different kinds of trends, and attackers move like really, really quickly. And by the time, some of the different kind of stopgaps and precautions that are put in place are there, oftentimes, they move away, right? And so, but I think this ties and highlights like an even bigger trend, which is, generally fraudsters move to the point of least resistance, right? And so you always have to you asked, right? Like, why do we see all these different hacks? Why does these things happen all the time, right? They move to the point of least resistance, right? Wherever there isn't enough kind of friction preventing them from operating, they will just act, right? And kind of, spread and grow and kind of continue those operations. And so, there's always going to be this kind of chase and arms race in terms of like, okay, great, we're going to raise we're going to build some kind of infrastructure here that's going to prevent it, and they're going to move. Trust me, they'll move. and then they'll move again, and then they'll move again, and it'll always be this kind of race. But I think that's what makes our job interesting, and that's what makes the space kind of interesting. And the hope is that eventually we make it so difficult that only really the most sophisticated kind of actors are able to continue to operate.
Speaking of sophistication, what do you see now? Like, is it more, hey, there's a vulnerability, we've seen it deployed against certain protocols, and just not all the protocols have found a patchwork for it and solved? Or is it just completely new, sophisticated attacks that even from a cybersecurity lens, and even, the protocols that are putting in the most amount of, compliance and auditing measures have never seen before? Which, like, if you had to give it a weighing, is it absolutely new things that are coming out using AI? Or is it kind of like the same old trick, just to your point, they're just going to places with lower friction?
I think it's a combination of both, right? It's not like, and I think generally, like, again, when you're focusing and talking about like protocols and different kind of cybersecurity, vulnerabilities associated with them, generally we're talking about things that are happening at the application layer of crypto, right? And so these are application level, like logic, like vulnerabilities generally, right? And so as a result of that, I think it's only safe to say that these things are, unique to every application. Now, oftentimes they leverage a lot of the same techniques, right? There's a problem with permissioning, right? There's a problem with, maintaining, managing liquidity. There's a problem with permissioning around certain, certain key and off-chain infrastructure. There's all these different things that obviously, when you take them separately, right, repeat. But when you put it all together, it's a specific vulnerability that's enabling a user to kind of, extract value from this kind of application in a really specific way. And so, and again, even drawing that parallel to like traditional cybersecurity, right? Application level security is a big problem, right? That is harder to solve, right? When you have something that is like more specific to a specific application, it's generally harder to solve as opposed to infrastructure level security misconfigurations or things like that. I hope that answers your question.
It does. It actually made me think of another one. Are you surprised by society that we haven't demanded more security from some of these protocols? Like, I can imagine, like, with a bank, like, we'll put our credit card information anywhere because we know we can call the bank and they'll reverse the charges. With a lot of these Web3 protocols, even the ones that are hacked and somehow, the protocols are able to make them whole, as you probably know more than me, there's a lot of them that don't come back for these hacks and that money's gone forever.
Right.
Are you maybe shocked that these users aren't being a little bit more selective of what protocols they go on to? Like, hey, if I'm going to use a protocol, I want something like Blockaid that can detect something happening before, that transaction's even facilitated. Yeah. What are your thoughts on that? Are we being a little too willy-nilly with our crypto?
So I think two things here. One, the first is like, how does the industry look at this? And then maybe two is like more so regulation related. But I think, one, at the end of the day, right, as an industry, we're building financial infrastructure, right? And when we build financial infrastructure, like we as consumers, obviously, Stephen, you're deep in crypto, but like you can put your non-crypto hat on for a second. And when you think about, okay, where am I going to put my money? Generally, the major differentiation is trust, right? You use one bank over another, not because, one gives you higher yield generally, right? The products are pretty commoditized when we think about it, right? Generally, it's a matter of trust. Like, will I show up the next day and will my money be there? And oftentimes, like you think about even like you have kids, right? You think about the banking products and the financial products that they're going to use. They're probably just going to use the same bank you use, right? Because like, it's like this level of trust, right? This worked for my parents. It'll work for me too. It'll, and so on and so forth. And so I actually think that when we think about like financial products and the number one thing that they care about is that level of trust, right? And I think a big part of that level of trust is security. Maybe not 100%, but a lot of it is that level of security. And so ultimately, I think cybersecurity is a differentiation for a lot of these products, right? Whether it's regulated, whether users think about it like knowingly or not. And I think in the industry, right, we talk about linsiness often, right? Like how long has it been since a protocol has been hacked? Or how many days has it existed without it? And I think like literally the linsiness of a protocol or a smart contract is its differentiation, right? Like I think we all trust Aave, we all trust Uniswap because these are very linsy protocols. Maybe the first part of your question is like, I think already it is like a differentiation. And then I think it's just a matter of like, we as users and how do we internalize that? You may not think about it as like cybersecurity, but you generally think about it as like a brand you can trust.
And I feel we probably in the crypto and especially in the DeFi space look at yield a lot differently than we do in the traditional space.
Oh
I
yeah.
think we're a lot more risky with yield. I feel
Yeah.
in the crypto space
But even then,
now.
I feel like we've learned and grown a lot, right? Like, if you don't know where the yield is coming from, right, is like a saying I hear much more often than I did 2 years ago.
If they use the word yield too much in their in their marketing and
Yeah.
it's not staking, you might be in for a surprise.
Yeah.
Now you're working with some of the biggest and the largest wallet providers. That makes a lot of sense. But you work with the exchanges too. What are the exchanges using in regards to your services? Like the wallet service providers are a little bit more decentralized. It makes sense that they're going to use a tool like yours. But the exchanges, where are they in, implementing Blockaid?
Yeah, so I think of exchanges as like these like massive crypto businesses. They do a lot, right? Like we think
Yeah.
about exchanges as like great, it's like an on ramp and they have an order book. But honestly, it's like much more complicated than that, right? Many exchanges have trading desks. Many exchanges, have like obviously, like massive custody businesses. Many exchanges, have some form of interaction with like on chain operations. Many exchanges have self custodial offerings, and so the answer is like generally like what do we do with exchanges? Everything we do with everyone else. They're just like these massive like crypto businesses that like use us for a bunch of different things, right? Obviously, like without getting into too much specifics, what we can and can't share with like specific customers, but like generally they use us for everything Blockade does.
And I'm curious, when I think of like custodian crypto and, wallets, exchanges, you say they use you in every different part. Where can law enforcement use it? Because I'm thinking like this would save law enforcement a lot of headache, time, resources. And I know it's tough to get government contracts for any organization, but is law enforcement something that is approaching you with like, hey, we see this rising pig butchering problem. How can we either mandate or even regulators, like how can they mandate, crypto businesses, blockchain businesses to utilize tools like Blockade?
So yeah, I think it's a great question, and we spend a ton of time in DC. I'm actually going to DC next week. We have a member of the team who's based there, and so we do a couple of things, right? One, we spend time with regulators talking about cybersecurity on both sides of the aisle. We spend time, with the White House that put out kind of an executive order. This was a couple months back. And had a couple pages focused on cybersecurity and what you could do. This was the first real kind of beginning of legislative work that isn't focused on kind of tying crypto to the Bank Secrecy Act and other things like that, but rather just talking about how we can secure this infrastructure in the first place. I think generally, right, as like an industry, and you've definitely been like a proponent of this and talking a lot about this. We've focused a lot on what we do after hacks, right? And we've and I think it's on one hand it's so awesome to do that because like you can't really do that in any other industry. It's like a feature of blockchains that is like pretty incredible to go and see exactly what's happening, after these like massive hacks and like watching hundreds of millions of dollars move before your eyes. It's like actually pretty like crazy that you can do that. And I think we haven't focused enough on how we can build things to prevent these things from happening in the first place, right? And so I think like spending time with regulators to make them feel like listen, crypto is not just about illicit activity and illicit transfers and illicit finance, right? And preventing illicit finance and all these different things. It's like if we prevent the downstream hacks from happening in the first place, we have a much smaller illicit finance problem. And so it's talking to them about that, educating them about that. That's like one part of the work we do. And then two is, obviously whenever some of our customers are involved, whenever folks in the industry are involved that aren't our customers, we have a ton of information, a ton of data about these different things that we work with law enforcement to provide to them. Not even as our customers, but just as like working with them to try to stop these things, right? And honestly, I agree with you that many times, they're a little bit too late, a little bit too responsive, not because they're not great, but because they're humans. And these things like happen at the speed of money moves and crypto at the speed of data.
And what's interesting about crypto, you mentioned like what happens after a hack. And because crypto addresses are not PII for the most part, everyone can join in protecting their exchange and work together in collaborative. Like if Ido's bank account gets hacked, like that's where it stops. Nobody can see where the funds were wired to or transferred.
Yeah.
Nobody can investigate. Like we have Twitter, Twitter investigators probably doing some more work than some law enforcement in the US, just because they have more capacity to do it. They're doing it for fun for the most part, and obviously to share on YouTube. But that can't happen in any other investigation that the flow of values
No,
moving
I
around,
agree.
which I find is super.
I agree. I think it's like almost like something magical, right? Like you like viewing like this like being able to view everything that's happening kind of on chain is like a beautiful thing, right? And like 100%, right? Like banks, right? Everyone has their own ledger. What is a wire? Well, I like, I remove like 10 from your balance and I add 10 to someone else's balance, right? Like no one else can see that except the folks that the wire went through. Nothing else, right?
Barely the sender and receiver can see it because they always have to get on the phone with the bank and ask what happened
There you
to the wire. So we're going into 2026. We're not out of the woods yet. 2025, there's still a lot of time. Give us the lay of the land. Like, what's the three biggest attack vectors that the Web3 community has to start paying more attention to at the end of this year and going into 2026?
I think the number one most obvious one is what we would consider blind signing, right? It's just, it's the easiest thing that you can go and mitigate. It's been the largest proponent of hacks this year to date, right? And it's just and it's like super preventable, right? It's like you just go in, if you simulate transactions, if you validate them before execution, if you have you build out really tight policies around those, you're good. Like these things won't happen anymore. And so I think like things like Bybit, things like what happened with Kill and Swissborg, and all these different examples that have taken place like over the past couple of years, all of these are super super preventable if we just like focus on blind signing. And so I think that's obviously the number one part of this, right? I think.
Can I ask you? I want to interrupt
Yeah,
you.
no, go
How
ahead.
much of that? Because there's been a lot of mixed stories around Bybit. How much of that is like Web3 versus like Web2 infrastructure, sophisticated social engineering
Yeah.
that this happens to happen to a Web3 company?
So I think it didn't just happen to happen. It didn't just happen to a Web3 company, right? It happened to a Web3
Yeah.
company because that Web3 company has like crypto to steal, right? And so
Right.
so it's heavily targeted, right? It's not just like oh whoops, I like stumbled upon this and this was like the best opportunity I could have, right? Like no, this was super super targeted. Now, like I think one thing that we all forget about is like Web3 security imports Web2 security. Like it's you have to be like buttoned up across the stack for this thing to work, right? But I think the difference is like what are the crown jewels? In like cybersecurity, traditionally we talk about crown jewels. Generally, crown jewels for an organization are its data, are its production applications. But primarily like it's data, right? And so when you think about like a threat actor that's coming into your organization performing some kind of sophisticated attack, what do they want to steal, right? Generally, they're not going to try to make you wire some money out because as soon as that happens, you'll see it, you'll call your bank up, and you'll claw back the wire. They'll try to steal your data. They'll try to encrypt your data. They'll try to do all sorts of these different things to either install ransomwares or go and sell like records on the internet, right? And so. And those are like the crown jewels there. When it comes to like a crypto exchange, when it comes to any crypto business, the crown jewels are very obviously like
The
crypto,
private keys.
right? It's like it's access to
Yeah.
the funds, whether that's by compromising private keys, whether that's by compromising signing infrastructure, whether that's by executing some sort of vulnerability like through smart contracts. It's ultimately those are the crown jewels, and so that's what makes it different, right? It's like in one I steal money, in the other I steal data, or I monetize data in some kind of way. And so 100% agree that Bybit is a sophisticated Web2 hack. Period. Full stop. 100% agree. But if you had controls and mitigations around the what we would consider like the crown jewels, that wouldn't matter. Right.
Right. I see what you were saying. The attack might have happened on the Web 2 side, but the protection should have been there on the Web 3 side.
Exactly. And if the protection was there on the Web3 side, you could do all you want on the Web2 side. It doesn't matter. Similarly, to how organizations go and say, you can hack everything all you want, right? But if I have super tight permissions on this like super critical database or on this super critical application that is like my most important thing in the world, none of it matters. Hack everything you want, right?
Right. What else? What else are you seeing? Like, has there been a rise in any sort of activity recently versus before? Like, what else are you seeing, or is it like just the same old attack but different year?
I think there's obviously like a rise. I think what we're seeing is you know, um, is generally that because of market conditions, folks want to ship more and they want to ship faster, and
Right.
obviously that leads to more mistakes, right? This is, by the way, true outside of just our industry. We're seeing this kind of across different kinds of AI products or different kind of products, right? The market conditions make it frothy and make people want to ship as fast as humanly possible, and things are half baked, and so that leads to security vulnerabilities.
I'm curious. Like, I know from a compliance officer angle, they're usually brought in, not usually, but in some projects, they're brought in at the end, like legal's brought in at the end versus at the table. You never really hear about the CISO, though. Where are they brought in, from like a product design, products ready to ship? Are the CISOs at the start of those conversations? In your experience, I'm assuming you interact with probably a lot of CISOs at these Web3 companies.
It's
Where are they brought in? Are they brought in too late, or are they brought in at all?
It's a great question. I think people in crypto generally tend to be really, really security forward, right?
Mhm.
Most developers, most product teams think about security from the get go. Now, if they bring in their security or CISOs or things like that, oftentimes, honestly, security is an afterthought. It's always an afterthought. You have to build an application first, or understand like what is the thing you want to build, and then you focus on securing it, right?
Right.
I think it's always a band-aid, right? It'll always be a band-aid. It'll always be like the thing that you put on after, right? To make sure like that the thing that is valuable and generates revenue for us is continues to function and doesn't break on us, right? And it makes sense, right? If I was a developer, right, I would focus on kind of finding market fit, building what the thing I want to build, and then I would focus on building out all these kind of bigger security apparatuses after that. Um, and so generally, I think in crypto actually, it is actually more forward thinking than you would expect, and folks are kind of brought in earlier. But your comment on compliance is interesting. I would argue that probably in crypto compliance is brought in later than it is in traditional finance.
Very rarely. They try to avoid it until something's ready. I've heard too many stories. I'm curious. I see a lot of compliance, like as you said, when the market gets frothy, lawyers, compliance officers start charging whatever they want in Web3 because there's not a lot of supply out
Right.
there. Because cybersecurity is not really regulated in the sense for the most part, now we're seeing things like DORA in the EU where you have to put in certain like you have to use certain vendors that are prioritizing certain things. Do you see is there a market for cybersecurity professionals in Web3, etc.? Like, has this become like the hot demand for personnel?
I think we talk to companies all the time. There's definitely like a market for hiring folks like that are with a security background and expertise like in crypto. There's definitely a demand for it. If it's more than compliance officers, gosh, I don't know, man. But I think there's definitely a demand for it. I think it's definitely if I was a founder building an application in crypto, it'd be one of my earlier hires, right? Like you have to build the product, you have to have the product team, maybe you have like a go-to-market function, but after that, you should probably pretty much like bring on a security professional and maybe like a general counsel or a compliance officer or something like that, right? I think those are like the next two logical things for any team building in the space.
You mentioned AI. Everyone's coming out with stablecoins. The agentic payment race has now started, and the utilization of stablecoins for micropayments. Especially, we're seeing autonomous cars. What are some of the concerns you believe, especially with agentic AI, especially those that are leveraging crypto payments? What are your thoughts around where cybersecurity ends or where Blockaid gets intertwined with this new ecosystem of payments made by robots?
So I was actually a like agentic payments skeptic. If you asked me that like a couple weeks ago, and what really kind of agentic payments pilled me, if you will, was the announcement that Cloudflare made around paper crawl. I don't know if you saw that, and kind of they're joining kind of X402 and everything there. I think that made everything click for me in a way that it didn't before. So I'll be honest that I wasn't on the bandwagon until now, and now it makes a ton of sense for me, right? So I think, again, when we think about cybersecurity and what are the risks there and stuff like that, we have to first think about the use cases. What is actually what will this actually be used for? And I think 402, I think is a really clear path to how robots pay each other in an internet native way. And I don't know, I can dive into it and explain it if you want a little bit more. But I think generally, when you think about the risks there, what happens there is all of a sudden, okay, great. So now I am, this piece of software, maybe I'm this AI agent and I'm crawling the internet and I have to pay sites for the data they provide to me, right? And so now all of a sudden is, okay, what if I pay you and you screw me over? You don't give me anything, right? So does the AI agent learn from that? Does it not learn from it? Do other AI agents learn from that thing? Maybe, I paid for it and I got something and it wasn't that great. Maybe the AI agent, bought that information and then used it in a nefarious way. Maybe they did all sorts of nasty things there, right? So you all of a sudden, start having these forms of fraud on either side of these payments, right? Whether that's the merchant that's defrauding an AI agent or whether that's an AI agent defrauding a merchant in some kind of way. Now, obviously, payment still goes through, right? These are atomic, transactions that can't be reverted, right? So we don't have kind of the clawback or kind of chargeback risk that we would in other kinds of payment rails. But we do have, definitely risk, especially on the merchant side, defrauding these AI agents in all sorts of different ways. And so I think that's where some of the risk comes in. And that's where kind of, and Blockaid basically already does that today in self-custodial wallets. And so that's kind of where we fit in, I think, in whatever the world will look like in the agentic kind of payment space.
You mentioned something in the previous discussion around Web 2 infrastructure and how we protect better Web 3. We saw with Coinbase, they basically bribed their their outsourced team to give over data. How do you better protect Web 3 infrastructure? You mentioned that's what we have to do. Where's the focus there?
Yeah.
Is it access? Is it multi-sig? Where would you be focusing if you're a protocol or an exchange on how to better protect yourself from these types of scams that happen off chain, pretty much?
100%. So I think this goes back to our conversation around what are what's the number one issue, right? It's and so I think and I call that blind signing, but I think another way of phrasing it or looking at it is okay, so you have this notionality of okay, is my key secure? Are my keys secure, right? And I think generally when we look at all these different hacks, it is not that someone steals a private key, right? But it's rather that they are able to convince that key in some kind of way, whether that's a human in the loop, whether that's a human in the loop that installs some sort of software that does some sort of thing to sign a transaction that's not supposed to, right? And so I think generally as an industry, we've become pretty good at key security generally, right? It's storing the actual private key, whether that's through multi-sigs, through MPC solutions, through cold storage. We've become pretty good at that. The risk and level on top of that is key misuse, right? It's generally is that key being used for the thing that it should be used for? And generally, I think that's where the number one, that's where all the risk is, right? Even when you look at these scams and pig butchering and stuff like that, ultimately it is a user that is misusing their credentials to move money in a way that shouldn't happen, right? Because they're being, social engineered or you're hacking the humans, right? In the case of Bybit, right, we're hacking some kind of interface that's convincing us to sign something that we probably shouldn't, right? In the case of Kiln, for example, we're convincing, again, some kind of interface to go and kind of through an API to go and kind of, present this kind of transaction in a negative way. And there's so many more cases like this, right? And so I think that's probably the number one thing. There's obviously, other risks and areas, right? Even in the case of, for what it's worth, there was the hack on GMX, right? That was, an off-chain keeper that was able to kind of propose a malicious transaction. So obviously there is the risk of smart contracts as well, receiving malicious transactions and executing kind of code that they shouldn't, that they were not intended to execute, right? And that is definitely a risk, and monitoring for that is definitely a risk and super top of mind. But I think the actual larger attack vector today in the space is what we would call key misuse.
how confident would you be if you're an average user pressing that connect wallet button? Like on a scale of like 1 to 10, because we're seeing a lot of these attacks that have to do with that, the SDK,
Right.
old exploits. Like, how confident do you think a consumer should be? 10 being the most confident. How confident do you think the average user should be in connecting their wallet to anything out there, including purchasing NFTs, signing into a new protocol or a decentralized social media?
Well, if they're using a wallet that's powered by Blockade, they should be really confident. Uh, you know, um,
Alley oop.
there you go.
Your company and Dynamic, who's both both public key podcast alumni, you just launched a 2025 stablecoin playbook, which provides guidance, for new entrants getting into stablecoins. To your point, when the market's frothy, everyone's trying to get into crypto. Just similar to when everybody in the pandemic had to come online, that's a scammer's dream. Where inexperience has to do something in the digital world where they've spent most of their time trying to, find exploits and vulnerabilities. Can you provide maybe some key insights and contributions that you had to the report?
Yeah, I think generally, we spoke. Well, one, I urge people to read the report. I think it's a really, really great report. I think it's awesome. I think more companies should do stuff like this, highlighting some of the things that they see. I think, for us generally, like some of the things that we kind of talk about a little bit are, the security concerns when it comes to whether being an issuer, a user of stablecoins, a consumer of stablecoins. I think, whether, either way you kind of flip the market, there's different kinds of players that do different kinds of things, and they have different risk associated with them. But at the end of the day, it's not too dissimilar than just interacting with crypto generally, right? There is nothing new here fundamentally. And so it's the same kind of things, right? It's making sure you have good access control around kind of the smart contracts that you're deploying and monitoring around those functionalities, that you're looking at specific invariants, that you're building different playbooks and kind of pause functionality that can be deployed when kind of issuing those, that you're protecting the different kind of contracts, the different kind of wallet addresses that are able to mint more assets, move assets in different ways, control the treasuries in different ways, sign transactions that are risky, and so on and so forth. So it's funny, right? Like, I think stablecoins change everything, but from a technical perspective, they're more of the same, right? And so obviously we have our stance in terms of like what it is you, as someone kind of playing in the stablecoin space, can use Blockaid for. But ultimately, when you like double click there, it's a lot of the same.
I didn't think about that minting function. Something that gets attacked on the minting. If you can, create something that has a market value and just have an unlimited amount of minting capabilities, that could be problemsome. I'm assuming you're foiling a lot of these big scams. You're protecting the ecosystem. That makes you a target, especially when you start thinking about nation state sponsored actors. What is your biggest fear or risk at Blockade from like an attacker perspective?
Yeah. So one, we've built out like an in-house security team, and so we take this incredibly seriously, right? Some of our backers are some of the best early stage cybersecurity investors. We dog food a lot of the solutions inside of our portfolio. I think one level of differentiation that we have across others in the space is just how seriously we take cybersecurity internally, right? And so we have we focus on this like all the time, and spend a ton of time thinking about it, and have folks like full time that are focused on our internal security.
How do you manage the trade off? Anytime you go cybersecurity, compliance, investigation, intelligence, you're always going to get the privacy debate and pushback. How do you balance, the need for privacy and decentralization, but also the need to provide threat visibility? Because it's one thing to be libertarian, but it's another thing if you don't have any crypto left in your, wallet because it was drained. So
Right.
how do you balance both of those ethos in the ecosystem?
So, I think we are very much like an unopinionated service provider, right?
Yeah.
Like, we will do what our customers want us to, right? And if our customers want a really privacy centric solution, we have that. We can ship it, and we can enable them to do it. There's trade offs, and we'll tell them what those trade offs are. But I think we don't take kind of a stance on kind of what we do. I can tell you what most of our customers do, but if you want to be kind of super super privacy conscious, we can deliver that. And if you want to, be less so, leverage other kinds of analytics and things like that, we can enable that too. We run the full gambit.
How do you envision the security landscape looking like in Web3, blockchain? I'd say 5 to 10 years, but things change so quickly. Even with the change of administration, we've seen the move to digital assets and stablecoins. What do you picture the industry like in the next couple of years when it comes to cybersecurity and Web3 converging?
Right. So, I think the story of cybersecurity and Web3 convergence has to do with Web3, right? Like, what does the industry of Web3 look like over the next 5 years is, I think, the better question. And so I think I have like a bull case and a bear case, right? The bull case or the bear case is like, I just hope some of the regulation that this administration has put forward doesn't get rolled back, by the next administration, right? So we're like, we're almost halfway through, and sorry, we're almost a year through, so almost a fourth of the way through. And so 5 years would mean that we're 2 years into the next administration, right? And so I just hope that 2 years into that we don't have like a complete rollback of everything, right? I think that's like the bear case. I just like continue in the direction that you're headed, right? And then what does that mean for cybersecurity? I think it means what you could expect it means, right? It's not like nothing crazy is going to happen. There may be some new regulation in place. There's going to be like much more usage in crypto. We're going to have many more kind of financial institutions leveraging these pieces of infrastructure. They're going to be very security minded and conscious about it, and I think that'll make the space grow generally. And then my bull case is that things take off in a way that we obviously like we could not have expected, right? That every company is interacting with and leveraging stable coins, and much more to come after that. And so I do think we're at a point where the genie is a little bit further out of the bottle than you can't really, and it's kind of hard to take it back in. But I think there's still always that risk that we get a lot of the things that were rolled back.
In just 3 years, you went to 70 plus employees, I believe. You recently just raised $50 million to start this year. How do you deploy that capital? Maybe give us a little bit of a breakdown of like what are the engineer roles versus non-engineer roles, and then like from a leadership standpoint, how do you and Roz like manage like what used to be like a few people to like now you probably have an HR department and you're dealing with employees and sicknesses and benefit packages. How do you deal with all of that?
I think at the end of the day, everything we want to do is kind of continue to deploy security solutions for our customers, right? And as those customers grow, as those needs, become bigger, there's obviously like a lot more like behind the scenes to go and do these things, right? Our internal security detection broadly across a bunch of different chains, a bunch of different ecosystems. We support a ton of non-EVM chains. There's like a ton that goes into all these different things. So our engineering function is still like the overwhelming majority of the folks at the company. And then of course, there's a ton of organizations operating in the space, and so we have a growing kind of go-to-market team that kind of works with our customers and new customers to kind of onboard them, get them set up, and make sure they're incredibly successful.
Any exciting news, going into the end of 2025 and into 2026 with you and the team?
I think it's just I think the what's exciting for us is like super unfortunate for the industry, right? There's like these hacks that's like
Yeah.
that forces us to build and kind of innovate in kind of new spaces, and so it's always bittersweet, right? But I think like what's some of the exciting kind of new things that we're super focused on is kind of um, getting kind of our customers set up with some of our newer product offerings, whether that's kind of our cosigner, which enables teams to go and kind of prevent malicious transactions in a more enterprise use case, whether that's kind of our monitoring infrastructure, which enables kind of users to detect these various different types of threats and kind of prevent them from happening across their smart contract infrastructure, and of course our fraud solution, which enables kind of exchanges to or kind of or different pieces of kind of signing infrastructure from enabling users to sign malicious transactions, more so associated with scams and fraud.
Are you seeing anything else now that there's so much data coming in? You can see a lot of these addresses interacting with each other and interacting with illicit activity. A big conversation point is hiring DPRK IT professionals unknowingly by companies. do you see any of those insights? Like, do you see any like, hey, there's a lot of activity here with this protocol. It looks like it might be, they might have to start looking at who did they just hire, or was, like, how are you seeing any of that interesting data that might unfold just by the course of your work?
Yeah, no, it's a great question. It's like an unfortunate, reality, but I think like teams that take, their hiring seriously and these precautions, and obviously, with the bull market, you want to ship really quickly and you want these things to happen. Like, you know, uh, um, we meet all of our employees, right? We're in the office all day, right? We have these like kind of like precautions in place that make it so like these things can't happen to us. But we've seen it happen. We've seen it happen even to security teams. We've seen it happen to some of our competitors that have hired, these DPRK employees. It's like pretty crazy.
Any last words? I usually ask, what's one book, maybe podcast, an idea that's maybe shaped your thinking? I'm sure there's, a lot of people right now that look up to these successful companies like yours in cybersecurity, especially if they're going through, maybe the Israeli government. What are your, was there any one book or podcast you're like, oh, this really changed the way I thought? Maybe something on agentic AI.
Interesting. If it's not a book. One piece of reading that I kind of did over the past couple of weeks was kind of look back at like the initial kind of RFC for HTTP that was published almost 30 odd years ago, and looked at the section kind of detailing 402 we talked about back then. I think something beautiful, at least in my mind, is like how a 30-year-old standard can be relevant today for certain things, and like how smart someone must be or stupid someone must be for writing a standard 30 years ago that is relevant to a use case they might have never imagined existed. And so I think that was like a really, really insightful, piece of writing to me, at least, albeit pretty technical. So maybe not.
Yeah, that's what I was gonna say. I read one article, I pressed one link, and I was like, I think I know all I need to know about
There you go.
agentic AI.
To
I
each,
think I'll just stick
to
with.
each their
I
own.
think I'll stick with the chain analysis report.
There you go. To each their own.
Awesome. Where can people find you? Where's the best place to reach you? LinkedIn, Twitter. I'm assuming that you're active on both.
I'm active on both. Do you want me to like give my Twitter handle?
We're going to include everything in the show notes, but shout it out, man. It always feels good when people shout it out on the
My
podcast.
usernames on LinkedIn and Twitter is Ido, IDOBN. You can find me there.
Awesome. Thank you, Ido. We really appreciate it. This was a non-technical version though. We didn't use too many acronyms, so I'm really impressed with what we did in this episode.
I'm glad. Thank you, Stephen. Always a pleasure.
Thanks.